The increase in deposits that we saw across Bank SA this year have really been driven by the very attractive offers that we've had out in the marketplace, and essentially that's our mum and dad customers, so retail customers, as well as people who are running their own self-managed super funds, who have really sought out the stronger rates in term deposits. And I think the attraction there has been obviously the stronger rates, but also the safe and secure attraction of putting your money in a trusted brand like Bank SA.
And the volatility of the share market, does that add to the attractiveness of cash?
Absolutely. So there's been no doubt that on the self-managed super fund side of things, that people have very much looked for how they can get a more secure return over time, and term deposits have proven to be very attractive for people.
Now, the interest rate cut, that'll see home loan interest rates go down. Will that have any impact on those savings deposit rates?
My expectation is that we will see the rates for deposits also come off a little bit as a result of the reduction in the cash rate by the Reserve Bank of Australia. That said, deposit rates are still very competitive out in the marketplace, and for Bank SA we'll still very much be focused on having competitive offers out there for customers as we continue to grow our deposit base. So that's a strategic priority for us going forward.
Now, the home lending market, what's it like at the moment, and what do you expect out of that rate cut?
Look, the home lending market, and if I just talk in South Australia, we've seen that it certainly has weakened over the last 12 months, and I'm certainly hoping that the rate cut gives consumers more confidence, and confidence as we go into spring, that there are some good opportunities out there in the house market, and so for people to re-enter the market as buyers. And obviously a rate cut makes it that much more affordable for people who perhaps might have been considering it, but hadn't had the confidence to step in.
The last time we spoke, we were talking about the first home buyers, and you had a few products out there to try and lure them back in. What's the state of the first home buyer market now?
Look, we haven't seen any significant increase in the first home buyer market, so I certainly do think that the rate reduction will assist that segment of the market, because traditionally, obviously, first home buyers, it's the big challenge of saving your deposit, so no doubt this will help them in the affordability overall.
In the business sector, how's South Australia's small business sector coping?
There's no doubt that it's been a challenging year for business in the South Australian market overall, not only in the sort of small to medium enterprise, but also up into sort of the larger commercial enterprises. We've seen overall the market decline in terms of credit growth. I was very pleased with our result in Bank SA, where our commercial team, in helping our customers, were able to grow our overall commercial lending book. So that's been a really positive result, in a declining market.
There's some sectors though that are really on the edge. You make note, for example, in your statement that South Australia's manufacturing industry and the retail sector, very much like the rest of the nation, are suffering. There must be by now a few of those who are hovering over the edge almost.
Look, there's no doubt that both the manufacturing industry and also the retail industry in South Australia have seen very challenging times. The high Australian dollar, has impacted as well. That said, when I look at the mix of customers that we have, and we represent a large part of South Australian customers, overall, we're still really pretty happy with where those customers are placed. There's no doubt that, as I said, it's been more challenging, but our impaired assets, whilst they've increased this year, it was mainly as a result of some of the impacts in commercial property, with links into the retail segment especially, which we know has struggled. But, overall, I think that the quality of what we're seeing in our portfolio remains very strong.
So, looking back over the year, are you happy now where you are, given the very challenging global conditions and some of the challenging national conditions?
Look, I'm very proud of the result that our team has delivered, and that's come through working closely with our customers over the last 12 months, as we have sort of helped customers work through those challenging conditions. So we've had a result that shows our core business is continuing to grow. So we've had a 5% growth in home lending. We had an 8% growth in deposits, which has been really strong. And we also had growth in our commercial lending book. And I think in the times that we've faced into, that's a pretty good result.